Hi. Well, during last week, we had seen that our markets has more or less seen a consolidation phase in the range of 11,600 to 11,800. Well, on the weekly expiry trading session, we had seen a decent pullback move from the support of 11,650 to 625. And then again in Friday and in Monday's trading session, some pullback of that up move was seen. Well, if we look at the recent historical data, then in last few trading sessions, almost 4 or 5 occasions, the markets have respected this support of 11,620 to 11,650 and has shown a bounce back move. In fact, in today's trading session, in spite of some of the negative flows from the Asian markets today before market opening, we have seen the markets giving a decent rally to again surpass the 11,800 mark and closing around that 11,800 zone. So we are expecting the markets to resume its high degree uptrend. If you look on a positional basis, post elections results outcome, we have seen more of a time wise correction within an uptrend. And we are of the opinion that this time wise correction is about to end very soon. So our markets could rally around 12,000 mark very soon. And once 12,000 is surpassed, then new highs certainly would be on the cards. So we have been advising our traders to trade with a positive bias since till this 11,600 support is intact and expect 12,000 levels in from a very short term perspective. Amongst the sectoral indices, today most of the sectoral indices ended in the green, which is a positive sign and indication of a broad market participation in this up move. Banking space has witnessed good long formations in last few trading sessions, and we expect some stocks within the banking space to show some outperformance compared to broader markets. Also, the Nifty Midcap Index has already seen a price-wise as well as time-wise correction in last few months, and now it seems that we would be witnessing some outperformance from the mid-cap counters in the upcoming rally. But traders need to be very selective in the mid-cap counters. Quality names which have been beaten down in last few months should be picked up from a short to medium term perspective for decent returns. As far as stock specific action is concerned, amongst the large cap space, we are positive on stocks such as ICICI Bank and Reliance Industries. Since within the large cap space, these have been outperformance during the recent in last few months. ICICI Bank at current levels could be bought with stop loss below 420, expecting target around 450 to 455 in near term. Similarly, even Reliance Industries has seen a time-wise correction in last few weeks. We expect this stock to resume its high degree uptrend, and the risk-reward ratio is now favorable to create fresh longs with stop below 1250. The stock could see levels around 1380 in next couple of weeks time frame. Amongst the mid-cap names, we believe that Exide Industries is one of the name which could see a decent up move in short term. The stock has been trading in a channel since last few weeks, and if you look at the higher degree chart, then the weekly 200 average has been acting as a decent support in this downtrend. So one can go long in Exide Industries, keeping stop loss below 195, expect target around 216 to 220 from a near term perspective. Thank you.